Welcome to the deep dive. We cut through the noise, get straight to what really matters. The crypto world, it moves so fast, right? Easy to get lost in just a blur of headlines. But today we're doing a deep dive. We're looking at the latest Bitcoin market intelligence, specifically from August 22nd, 2025. We've got a whole stack of insights here, everything from daily price swings to these really big shifts in global regulation. Our mission, simple. Distill the important stuff, give you the clearest picture of what's actually happening, and help you figure out what it all means for digital assets.
Yeah, it's true. The market really feels like it's at a pivotal moment. You're seeing this really intense short-term selling pressure. But at the same time, there are these huge foundational changes happening. Regulation, how institutions are thinking, even the Bitcoin network itself. We'll try and connect those dots for you, help you understand the immediate market stuff and the positive long-term picture.
Okay, let's jump right in then. The immediate reality. The
Okay.
price. What's Bitcoin doing? It's been trying to find its footing, after a pretty turbulent week. Mostly trading between, 112,400 and 414,000. Closed recently at $113,108.76. That was after a 2.79% loss. And we're seeing this critical battle right around the $112,000 support level. Historically, that spot attracts buyers.
It does, yeah. That's a key level.
But if it breaks, we could be looking at maybe 109,000, 110,000.
That's the potential downside test, yes.
Okay. But on the flip side, if it breaks above $114,600, maybe $118,200, that could signal bulls are back.
A break above those levels would certainly be a positive sign, yeah. Suggest a return to momentum.
Right. And even with this short-term wobble, Investec, for example, they're still calling it weak positive short-term, but positive long-term. So with all that price stuff happening, how should we read, investor sentiment right now?
That's really the crucial question. Sentiment is definitely shifting. You look at the crypto fear and greed index, it's actually moved out of fear back into neutral, which, that's constructive, less panic. But it does suggest caution, a wait-and-see vibe.
Okay, wait and see because of...
Mostly macro factors. Everyone's eyes are on Jerome Powell's speech at Jackson Hole. We had that hotter-than-expected inflation data recently, and that sort of dampened hopes for a September rate cut. And that kind of uncertainty, it naturally puts pressure on risk assets, Bitcoin included.
Makes sense.
And this environment, it's led to quite a bit of market deleveraging, investors reducing risk. We saw over 20,000 Bitcoin held for less than 155 days, sold at a loss. But here's the interesting part. It wasn't just forced liquidations from too much leverage. If you zoom out, it actually suggests a maturing market. The selling seems largely voluntary, profit-taking, strategic risk management. It really shows how deeply Bitcoin is now plugged into that global macroeconomic picture.
So calculated moves, not just panic selling. That's a really interesting sign of maturity. Speaking of more calculated moves, let's talk big players, institutions. We just had a massive week for U.S. spot Bitcoin ETFs, over $1.15 billion in net outflows. That's the highest in 5 months. The peak was Tuesday, right? $523 million out in one day.
A huge number, yes.
That's a lot of capital moving out. But here's what caught my eye. Maybe it's a subtle shift. These outflows, they started tapering off pretty quickly. From that $523 million peak, down to $315.9 million Wednesday, then $194.4 million Thursday. What's the sort of hidden message there? How are institutions thinking?
Well, it's maybe not so hidden, just needs a closer look than the headlines give. Analysts are mostly seeing that first big wave as tactical de-risking, profit-taking, getting ready for those macro events like the Powell speech we mentioned, not necessarily a loss of long-term belief.
Okay, so repositioning.
Exactly. And the fact that the outflow slowed down so much suggests maybe that repositioning is wrapping up, which could help the market find some stability, find a support level. But here's the really fascinating part. Despite these short-term moves, institutional conviction in Bitcoin for the long haul seems to be getting stronger.
Really? How so?
Well, look at Bitwise, asset manager. They just put out a forecast predicting Bitcoin delivers, get this, 28% annualized returns over the next decade, outperforming all major traditional assets.
Wow, 28% annualized. That's bold.
It is. And they also noted a huge jump in demand for these long-term projections. 12 platforms asking for them this year, between 2017 and 2024. Zero.
That says a lot.
It really does. And you add to that reports of new demand from wealthy Asian family offices, apparently boosting their crypto allocations to maybe 5% strategically. It's not just a fad. It's Bitcoin becoming a core strategic holding for serious investors. Even if you see some short-term bumps like MicroStrategy's stock dipping after their share announcement, the long view seems strong.
So institutions aren't just dipping their toes anymore. They're figuring out how to swim, managing Bitcoin like a serious portfolio piece. That's big.
Uh-huh.
Okay, let's shift gears from the market itself, the regulatory world. It feels like it's undergoing massive changes globally. In the U.S., the CFTC kicked off the next phase of its crypto sprint,
Mm-hmm.
trying to fast-track a federal framework for digital assets. Acting Chair Pham even called it part of a new dawn for crypto, wants people involved in a golden age of innovation. Sounds like a serious push, especially coordinating with the SEC's Project Crypto. And they want public feedback by October 20th. Feels like the U.S. is finally getting serious. What about elsewhere? What's happening globally?
And it's definitely not just the U.S. If you look globally, you see this pattern repeating. Take Europe. Gemini just got a MiCA license in Malta. MiCA, that's the big EU-wide framework, right? Designed to create consistent rules across the bloc.
Right, markets and crypto assets.
Exactly. So that license lets Gemini expand across like 30 European countries under one clear set of rules. It just highlights how vital clear regulation is for driving adoption and making crypto legitimate globally.
Definitely.
And then you look at India. Historically very strict, right?
Yeah, notoriously so.
Well, their top tax authority is now actually consulting with the crypto industry, asking really critical questions. Does India need a dedicated crypto law? What's the impact of their current tough tax rules? You know, the 30% tax on gains, 1% TDS, no loss offsets. That stuff pushed businesses to places like Dubai.
So they're actually talking to the industry now. That's huge for India.
It really is. It offers some hope for maybe a more balanced, globally aligned approach in a massive market. Could totally reshape things there if they ease up.
Wow. Okay. That global alignment is powerful. Let's zoom back in, maybe look under the hood at Bitcoin itself. On-chain data, foundational health, investor behavior. Indicators like the Crypto Quant Bull Market Index, they've shifted from bullish cooling to just neutral, suggest maybe more market risk.
Potentially, yes. It indicates a less strongly bullish phase.
And the MVRV ratio, market value to realized value, it's around 2.1. Now, that's not near historical tops, but it does suggest the market isn't exactly cheap anymore. Short-term corrections seem plausible.
That's a fair read. An MVRV of 2.1 indicates that, on average, holders are sitting on unrealized profits of about 110%. It's elevated, suggesting less of a bargain than earlier phases, and you combine that with the percent supply and profit metric also being high.
Meaning lots of people are in the green.
Exactly. Which historically creates this sort of background pressure and incentive for some people to sell and lock in those gains.
Okay, so these on-chain signals. What do they tell us about the network's core dynamics?
Well, it brings up a really interesting point about how the network itself adjusts. We saw the hash rate, the total computing power securing the network hit record highs earlier in August, but it's actually dropped off in the last couple of weeks. And that's caused blocks to take a bit longer than the usual 10 minutes to find.
Right, slower blocks.
So in response, Bitcoin's own protocol, its self-regulating mechanism, is expected to trigger a pretty significant downward difficulty adjustment. Maybe around 9% soon.
Wow, 9% down. That's big.
It's the biggest drop since the China mining ban back in 2021. And this adjustment, it's really crucial. It basically makes it easier computationally to mine the next block, which gives miners significant relief, boosts their potential revenue for the same amount of work.
Like the network giving them a breather.
Precisely.
Yeah.
It helps keep mining profitable, encourages participation, keeps the network secure. It's a fantastic demonstration of Bitcoin's built-in resilience, its ability to adapt.
That adaptability, the self-correction, is pretty amazing. Okay, finally, let's touch on the broader ecosystem, its health, its maturity. We're seeing cool advancements, but also some sobering reminders of risk. On the positive side, TRM Labs launched the Beacon Network, first of its kind, real-time crypto crime response network. Big players involved. Coinbase, Binance, PayPal, Stripe, law enforcement. Verified investigators flag bad addresses. That info spreads instantly. If flagged funds hit a vendor platform, bang, instant alert. They can try to freeze it before it's cashed out. Feels like a really big step forward against crime, right?
Oh, absolutely. It's a critical shift.
Yeah.
Moving from just reacting after the fact to trying to prevent the cash out. Disrupting the economics for criminals in real time. That kind of collaboration and intelligence sharing is exactly what the ecosystem needs to mature securely.
There's always a but.
There's always a but. Even with these great systemic improvements, the human element, it's still a key vulnerability. We just saw a really stark, painful reminder. One victim lost 783 Bitcoin. That's what, $91.4 million?
Ouch.
A very carefully crafted social engineering scam. Criminal posed as a hardware wallet support agent. fooled the victim completely. And this wasn't isolated. It's part of a trend. Investors lost something like $3.1 billion to theft and fraud just in the first half of 2025. It just hammers home that even with networks like Beacon, your personal security, your vigilance, it's still absolutely paramount. Tech can't stop a good con artist targeting an individual.
Wow. $3.1 billion. A powerful reminder indeed. Personal responsibility is key. Okay, so let's try and wrap this all up. What does this really mean for you listening? We've seen Bitcoin navigating this, well, fragile balance, it feels like. The really sharp selling pressure from earlier in the week seems to be easing off. ETF outflows tapering. Sentiment moving from fear to a more neutral wait and see. But under that surface column, the long-term investment case seems to be getting stronger. Those bullish decade-long forecasts, institutions getting more strategic, and globally, regulation is taking shape faster than ever, potentially setting the stage for a more mature era. It's a lot to take in. Bitcoin's role seems to be evolving rapidly.
It really is. You could say the current market is like a crucible. It's testing investors' resolve, definitely, but it's also forging a stronger, more secure, more globally integrated foundation for Bitcoin's future. Right now. Immediate direction probably hangs on Powell's Jackson Hole speech, those macro signals. Beyond that, keep watching the on-chain action, that tug of war between sellers and new buyers. And definitely keep an eye on how these big regulatory moves play out globally. As Bitcoin gets more woven into the global economy, into traditional finance, maybe think about this. With clearer rules and deeper institutional buy-in coming together, is Bitcoin about to really redefine store of value for our digital age? Is it challenging gold? Or is it becoming something else entirely, a whole new kind of asset class with its own unique rules? How might it reshape finance in the next decade?